What's up, guys? Chris Rivera here, founder of the E-Commerce Accountants. I hope everybody is doing well. In today's video, we're going to discuss Shopify accounting. Now, this is a topic that's very confusing for e-commerce entrepreneurs, but is also quite confusing for accounting professionals that are new to the space. So be sure to stay to the end of the video because there are step-by-step instructions for how to fully understand this. The first step is we're going to educate you on why there's a complexity with Shopify accounting, specifically with revenue recognition. Why does that income statement from QuickBooks that your accountant give you not agree to your Shopify dashboard? There's definitely some complexities and usually a knowledge gap for why accounting professionals and e-commerce entrepreneurs aren't aligned. Second, we are actually going to roll up our sleeves and hop into a QuickBooks account directly to make sure you understand how exactly your Shopify account should reconcile to your QuickBooks account so that your income statement directly correlates to your Shopify account and the data is all aligned. And third, we are going to cover specifically when you as an entrepreneur should consider hiring a bookkeeping expert, a tax expert, and even an e-commerce accounting expert. So without further ado, let's hop onto my laptop and go through the details. Hey, welcome into my laptop. Step one, we are going to cover why your Shopify dashboard does not agree to QuickBooks, either the P&L your accountant gives you or your actual QuickBooks account. And the key thing to understand from the beginning is that your bank deposits do not equal your Shopify revenue. So let's cover this at a high level first with the screenshots here, and then we'll jump into the details in a bit. So first things first, e-commerce entrepreneurs typically think of sales in this fashion, which is basically what are the sales for my Shopify dashboard? Whereas accountants and bookkeepers actually think about your revenues in terms of your bank deposits. And that's a crucial thing to understand because they're not apples and apples. Think about it like this. If you have $300 in sales today, what hits your bank account tomorrow or the next day, depending on your deposit schedule, it's not $300. That $300 gets captured, refunds get taken out of that money, chargebacks get taken out of that money, merchant fees get taken out of that money, and what winds up hitting your bank account is a netted number. So if you really think about it, your revenues per Shopify won't really ever match up with your bank deposits because there are differences in terms of how they're calculated. So if you're running into this outage on your end, my recommendation would be first educating yourself on how exactly these calculations work on the back end, then working on educating your accountant or tax professional to make sure they understand the exact same thing. And the key to doing that is first understanding the bank deposits. If you're going to explain something to someone, the most effective way is explaining it to them in a way that they already understand. And I've already established that accountants focus on the deposits first. So if you focus on the deposits first, it would probably make the most sense to explain to them what those deposits are so that they can back into the revenue number that you're looking for. So the key is understanding the flow of money. First is your sales channel. In this example, the scope of this conversation is just Shopify. We're talking about the Shopify account only, but again, this gets amplified the more sales channels you have, obviously. So if you have sales through your Shopify sales channel, those sales will go through a payment processor. Once they go through the payment processor, they'll go through the bank account. And all of you seasoned entrepreneurs out there already know this is a very simplified example. Why? Because if you have a Shopify sales channel, you almost always have multiple payment processors. So again, one sales channel, you might have Shopify Payments, PayPal, and let's just say Klarna. And there can be others in here too. You can have Stripe. You can have all different types of third-party payment processors. But essentially, all of these payment processors at one point or another deposit into your business bank account. So if you really think about this, if you look back at the screen before, you are basing your sales on the dashboard of your sales channel. Your accountant is focusing on the bank deposits per your bank account. You're looking at two separate sides of the transaction. Now, Let's dive into this a little bit deeper so you can clearly see how this can get confusing for a professional. If you have sales going through Shopify Payments, Shopify Payments pulls their fees. They net for their refunds, they net for their chargebacks, and then the net number gets deposited into your bank account. PayPal gets the net sales from Shopify, then they apply their own fees, then it actually sits in the PayPal account until you actually push it to the bank account. So automatically there's an outage there. And then Klarna obviously is in a similar situation to Shopify Payments, where there are fees associated with Klarna and they're giving you an upfront balance, not including the installments that are collected from customers, but they're giving you an upfront balance, including their fees, that gets deposited into your bank account. So essentially what your accountant is seeing is deposits from Shopify, deposits from Klarna, and then PayPal may or may not be depositing money into your bank account. This is what ultimately causes the outage between what's showing up in QuickBooks and what your Shopify dashboard has. And if you amplify this over time, meaning if you do this for 1 month, you're gonna have an outage. If you do this for 3 months, you're gonna have an even bigger outage. If you do this over the course of a year or multiple years, you're gonna have an even larger outage. I can't emphasize enough how big of an issue this is industry-wide. It's literally a systematic issue, this disconnect between e-commerce entrepreneurs and accountants that do work on e-commerce businesses. It's such a big issue that Alibaba literally tapped us to put together a video helping them to educate e-commerce entrepreneurs on the risks associated with revenue recognition for e-commerce businesses. So what we're going to do now is we're going to jump into part 2 of this video, which is actually rolling up our sleeves and jumping into a QuickBooks account and understanding what's on the back end of the Shopify dashboard and what should be entered into QuickBooks so that we're apples and apples completely aligned. So let's jump back into my laptop. Okay, so before we jump into the back end of the Shopify dashboard and the QuickBooks account, first I want to make sure you take away some core concepts of how we should be reconciling things and where that certain data should be pulled from. Because again, we have this money flow issue where we have the sales channel, we have the payment processors, and we have the bank account. Think of those as the big 3 categories. So the green items are data that you can rely on Shopify for. Your gross sales, your discounts, and your sales tax. Now, to be completely transparent here, 90 to 95% of e-commerce businesses fit this fact pattern, and it's this simple. But sometimes there are other circumstances where it's not this simple, so I just want to take a step back and make sure that that's super clear. But for 90 to 95% of you, it is this simple, where if you think about your QuickBooks accounting, you should be reconciling to your gross sales, your discounts, and your sales tax. That data should come from Shopify directly. Now, your merchant fees and your refunds should come from your payment processor account. And when I say refunds, this includes chargebacks as well. So your refunds, your merchant fees should come from your payment processor account. What do we mean? That data should come from Shopify Payments, should come from PayPal, should come from Klarna or other third-party payment processors. And then last but not least, bank deposits. That should obviously come from your actual bank account. So what's super important with QuickBooks accounting is making sure you're doing reconciled financial statements, and that includes reconciling to bank accounts and credit cards. So your bank deposits should agree to your bank. So once you understand this is really the key of bridging the gap between Shopify and QuickBooks. So let's hop into the back end of a Shopify account and we'll continue the conversation from there. Okay, so we are in the back end of a Shopify account. Super, super important. We want to make sure that you familiarize yourself with what's called the Finances Summary Report. So if you go to Analytics, if you go to Reports, and you need to find a report called Finances Summary, the category is Finances. And then if you go to Summary, Finances Summary, this report is crucial to understand. So we're going to do December 2022 and walk through this report. Now, this is going to bridge the gap between your sales channel and your payment processor. So think of these as separate and distinct categories. So this is your sales channel. So your gross revenues per Shopify sales channel is 827,000, discounts, returns, shipping, taxes, etc. So your total, I'll call this net sales, is 521,000. Now the question is, where did those sales go? This summarizes where those sales went. So for that same 521,000, 341,000 went through Shopify payments, 161,000 went through PayPal, and 10,000 went through Afterpay. This is crucial to understanding your cash flows, because if you have 827,000 in gross revenues, you have to understand where the heck is that money? What payment processors did it go through, and where should you be expecting the cash to come out on the other side? And here in lies your answer. Okay, so now that we have a good understanding of the finances summary report, let's hop over into QuickBooks. Once I'm logged into QuickBooks, obviously I go to reports, and then I select profit and loss, or commonly referred to as an income statement. So the main thing we want to take away from here is that the revenues reconcile right now. We'll get into the details as to how and why here, but first let's reconcile it. If I pull up my calculator here, we have 521,534.09. We're actually gonna back out sales taxes. The reason is because the accounting behind sales taxes is a bit confusing, out of scope for this video for sure. Let's just focus on the revenue recognition part without sales taxes. So we have 518,150, 518,140. We're off by $10 somewhere. Who cares? Shopify sales, 827K. Gross sales, 827K. Discounts, this also matches, 297, 297. The refunds are broken down by payment processor. Why? Because if we go back to this chart here, remember, the green items were reconciling to Shopify. These beige items are reconciled by payment processor. So the refunds and merchant fees are reconciled directly to the actual payment processors themselves. We'll get into the details of that here in just a minute. So this is the refunds, and then obviously further down in the P&L, we have the actual merchant fees as well. Okay, so I just want to pause here for a second and establish two things really quickly. Number one is that we want to make sure that you're not importing transaction by transaction data for your sales transactions from Shopify. Now, I know there's an integration between Shopify and QuickBooks, but the reality is there's far too many sales transactions if you have a scaled up e-commerce business that it would just make the data very sloppy and difficult to reconcile and track in QuickBooks. The reality is we view Shopify as your place to go for transaction by transaction data, meaning if you want to see what customers are refunded, that should live in Shopify. If you want to see your fees per transaction, that should live in Shopify. QuickBooks should be a summary of that data for financial reporting purposes, whether that's just general bookkeeping to make sure that your financial performance is good, or maybe it's to put together your P&L and balance sheet for a tax return. Those two should be two separate systems, and QuickBooks should contain summary transactions or journal entries, which we'll get into here in a second, that reconcile directly to your Shopify report. Why does it make sense to have two sets of data that are the exact same transactions and go through all that work if you have one that's already a really great primary resource? Now, the second thing we want to cover is we want to make sure that once your P&L matches, your revenue section of your P&L matches Shopify, don't stop there. We want you to make sure that as an e-commerce entrepreneur, you understand the money flow of your sales channel all the way into your bank account. So what that means is you should understand your sales channel. You should understand what money goes into what payment processor, and you should understand how much of that money comes from your payment processor into your bank account. And if you're missing money, what payment processor is that money sitting with? So we're gonna cover all of those topics here in the journal entry section of QuickBooks, and we're even gonna touch on the balance sheet as well, because it's crucial as an e-commerce entrepreneur to fully understand the cash flows of your business, and this really is the key to doing that. So let's hop into my laptop and take a look. Okay, so here we are back in my laptop. If we click on this account here, you're going to see the breakdown as promised, the journal entries. And all of these items reconcile to Shopify. Remember, 827K in gross revenues matches here to the finances summary report. Now, if we drill down even further to see the actual journal entry, it's quite complicated. As an e-commerce entrepreneur, I don't expect you to learn this or know this fully. You should find an accountant that really specializes in this to get this 100% correct. But the key takeaway that I want you to have here is that we have the revenue accounts laid out here. So you can see the transactions, but there's also a set of balance sheet accounts that are crucial to understanding the cash flows of your business. Let's go back to the finances summary per Shopify. Remember, if you have 521K in net sales, where did that money go? The answer is here. What payment processors it went through. So let's walk through one example here. We have Shopify payments. 341,000 went into that account. Now the question is, if you go through the journey again here, we looked at the sales channel, we understand how much went through the payment processor. Now we want to see how much actually went into the bank account. And here's how we trace that. 341,000 went into the Shopify holding account. So now if I go back here to the balance sheet, this is super, super important as an e-commerce entrepreneur to understand your cash flows. Let's go to December 2022, and here's that account. There is Shopify Holdings Store 1. Here is the balance sheet activity. So here's basically how it works. At the beginning of the month, we had 32.6K of unpaid balance from the month prior. At the end of the month, what we're saying is, okay, there's $341,000 of sales that went through Shopify payments. We can see that here. Then we're saying, okay, what were the fees? This comes from the Shopify payments account. You just can pull this from, if you go into the details for Shopify payments, you can see the fees. You can also see the chargebacks. But basically what we're doing is we're booking the sales for the month, how much we should expect. And it makes complete sense. We had total sales that went through the Shopify payments account of $341,000, but there was $11,000 worth of fees. That should be reversed out. And then this is a net positive chargeback number. Now, what we're looking at is actual cash deposits. These reconcile directly to your bank account. So if you were to pull up the bank account for this e-commerce business, you'll see on December 1st, 16K was deposited. Then 11.6K, then 9.8K. So throughout the month, you see these deposits coming in. And then what we do is at the end of the month, we issue that journal entry to say, okay, this is how much we had in sales in December. And basically you end up with a new carry forward balance. And if you actually look in the Shopify dashboard, you should be able to reconcile this number pretty spot on if you were to check this at the end of each month. Okay, so the next question would obviously be, how do we reconcile this stuff to Shopify? Number one, this should be reconciled to your bank account, but it is good practice to check to make sure all of these deposits match your Shopify account. So if you go back to Shopify, if you go to your home page, and on the right-hand side, there's Shopify payments. Again, every payment processor is different. This is just how you reconcile Shopify. And if you filter here, for the December payments, boom. You can actually see the payments here. Now this is a little bit confusing because this consists both of Shop Pay and Shopify payments. So we'll just go over the big transactions here because they're Shopify payments, but it's a good way to check both. This amount here is your carry forward balance. This is the total amount that has been unpaid to your bank account. So this is a good idea of a number to keep a pulse on, and that number in theory should match this one. Obviously, this is the number as of today, February 8th. This would be the number as of December 31st, obviously. So it's good practice to just check your carry forward balance every once in a while to make sure it agrees with QuickBooks. But let's check a couple of transactions here. Let's look at 11098. That should be here somewhere. 11098, boom. Let's check 9061, 9061 there. And it's good practice to check each and every transaction and confirm that it actually hits your bank account. So it's a good way to reconcile from, if you think about it, your sales channel, which again, going back here, your sales channel feeds into your payment processors, in this case, Shopify payments. And then from Shopify payments, you're going to your bank account, which is basically confirming that these amounts are actually hitting your bank account. Obviously, here in QuickBooks, we're reconciled to the bank account, so these are the actual deposits hitting the bank account here. Okay, so now we went through the first two sections of the video. Now we're gonna go through the third one, which is basically when to work with a professional. And we broke this down into different categories of do-it-yourself versus working with an expert versus working with an e-commerce accounting expert. So these are the revenue thresholds here. If you're 0 to 20K in revenues, typically what we recommend is that you do the bookkeeping yourself and you do the tax return yourself. Now, this is a tax threshold. If you're under 20K in sales, generally speaking, you will not receive a Form 1099-K, which generally means that Shopify or other payment processors are not going to report your sales to the IRS. You fall under a certain threshold. So that makes this situation significantly less risk. Basically what that means is it's less likely for you to mess it up. You still have to report that revenue and your profits, etc., but it's very, very low risk. And your profits will probably be pretty low, which generates a pretty low tax. Basically, for bookkeeping, it's probably okay to still use a sheet if you're at this revenue threshold, or if you have a family member that knows how to use QuickBooks. Basically, you're in hustle mode. You don't have to pay an expensive bookkeeper or an accountant to do this bookkeeping work. Also, your tax return is pretty low risk. You could use a system like TurboTax if you fall into this revenue threshold. If you're 20K to 250K in annual sales, it's a little bit different because the IRS probably is going to be aware of your revenues. If you have a US-based LLC with US-based payment processing, that's what I mean by the IRS being notified. If you're a foreign entrepreneur, these thresholds have different meanings for you. So I'm just speaking to American entrepreneurs or entrepreneurs that have American business entities here. But basically 20 to 250K, that usually means the IRS will be notified of your sales in some way, usually via Form 1099-K. So we recommend that you work with a tax expert, but again, you can probably still get away with doing the bookkeeping yourself. You know, if it's in a sheet, that might suffice. But again, if you get into QuickBooks, maybe you're working with a family member, etc. Basically, if you're under 250K in sales, you still do not have to report a balance sheet as part of your tax return. It's usually just a P&L that you have to report, which makes reporting simpler. A balance sheet is very, very technical and difficult for an entrepreneur to put together. Usually that will require a bookkeeper to do. But again, if you're under 250K in sales, that's usually not something you have to worry about. So you can usually put together a P&L yourself, so do your own bookkeeping. And then a tax expert, we highly recommend that you work with someone who knows taxes, a CPA, an enrolled agent, or something like that. If you're between 250K and $1 million in annual sales, that changes things because again, you're over 20K in sales, most likely the IRS is going to know about your revenues, but also you will be required most likely to report a balance sheet as part of your tax return. So we typically recommend that at this point in time, you hire a bookkeeper, someone who understands bookkeeping, a bookkeeping expert specifically. Now, if you're over $1 million in annual sales, typically what we recommend is you work with an e-commerce accounting expert specifically for your bookkeeping at least. We as an accounting firm, and I believe some of our competitors also do taxes as well, but at the very least, you should be working with an e-commerce accounting expert for bookkeeping and a tax expert if that firm doesn't offer tax services, a tax expert to do your tax return, tax planning, etc. Now, an e-commerce accounting expert is crucial at this revenue threshold because this is the stage where, you know, obviously your tax return, getting that accurate is important, but also if you want to sell your business one day, you want to make sure your accounting is spot on and accurate, because if you want to turn off a prospective buyer, the easiest way is to give them financial data that doesn't seem correct. You want to make sure your I's are dotted, your T's are crossed, etc. But also, if you want to raise funds through an investor, if you want to borrow money with a bank, you know, having accurate financials is immensely important. So I definitely don't want you to sleep on this, because a lot of entrepreneurs, not just e-commerce entrepreneurs, entrepreneurs in general, undervalue the importance of bookkeeping, and it's immensely important important beyond just doing taxes. Just understanding your financial performance is very, very important. And that pretty much wraps up our video. Thanks so much for watching. If you have any feedback for our video at all, put that in the comment section below. Any questions, put that in the comment section below. Any requests for future videos, feel free to reach out to us in the comment section below or really on any social platform. Definitely like and subscribe if you enjoyed the content, and I hope to see you all in the future on this channel. Take care.